You're watching the latest news from FinancialMirror.tv. The planned $700 billion bailout to shore up the battered US financial system looked set to drag into next week as Washington lawmakers haggled over how exactly they should or could make Wall Street pay for its rescue. Federal Reserve Chairman Ben Bernanke told the US Congress on Tuesday that financial markets are under severe stress and urged immediate action to buy up hundreds of billions of dollars worth of tainted mortgage assets. Bernanke told the Senate Banking Committee that despite the efforts of the Fed, the Treasury and other agencies, global financial markets remain under extraordinary stress. He urged Congress to take urgent action to stabilize the situation and avert what could otherwise be very serious consequences for the financial markets and the economy. Japanese firms are leading the rush to buy US investment banking assets after Mitsubishi UFJ Financial said on Monday it would take 20% of Morgan Stanley for $8.5 billion, and Nomura bought Lehman's franchise in Japan and Australia. Despite progress in such deals, markets remained nervous about the fate of the bailout plan, and European and Asian stocks fell. The dollar dipped and US government bonds edged up. Insurance giant AIG should have a list of assets it wants to sell by next week, while Canada's Toronto Dominion Bank is among those weighing a bid for Washington Mutual. Britain's FTSE index shed just over 2% by noon on Tuesday and 20% so far this year, as uncertainty over the proposed US rescue package to save the financial sector weighed on banks and weak raw material prices hurt commodity stocks. Banks took a hit with Barclays, HSBC, Royal Bank of Scotland, Lloyds, TSB, HBOS and Standard Chartered losing between 1.4% and 9%. Mining stocks sagged along with weaker metal prices, and energy stocks also tracked crude prices lower. But with oil prices still higher than a week ago, transport stocks were under pressure. British Airways, rail and bus operator First Group and cruise operator Carnival were all down. Imperial Tobacco, BAT and GlaxoSmithKline were also among the handful of gainers as they were seen as defensive stocks. Oil dropped $2 a barrel on Tuesday, weighed down by doubts around the US bailout plan and as investors booked profits after a historic one-day rise in the previous session. US crude oil for November fell $2 to $107.35 a barrel after rising nearly $7 on Monday. November Brent crude dropped to $103.80. The October US crude contract on Monday settled up 15.7% at $120.92, the biggest one-day gain on record, before expiring, supported by the weak dollar and on hopes the US bailout plan would ease the financial crisis and support demand in the world's top consumer. After hitting a record high of $147.27 a barrel in July, oil dropped to $91 last week on mounting evidence that high energy costs and slowing economic growth were undercutting fuel demand in large consumer nations. Prime Minister Gordon Brown has appealed for a fairer Britain in a speech to his Labour Party in Manchester, knowing many have lost faith in his leadership and are looking to replace him. Party members have given the unpopular PM time to sort out the economic crisis, but he could go after European elections in July if he fails to reverse poor opinion poll ratings. After 11 years in power, Labour is lagging 20 points behind the opposition Conservatives. Some Labour MPs want to replace Brown with a more public-friendly leader such as Foreign Secretary David Miliband. Others want a move away from former Prime Minister Tony Blair's centrist policies back towards Labour's roots among working people, while 4 junior ministers quit or were sacked last week after calling for Brown to go. The economy was once the jewel in Labour's crown. Now inflation has doubled, unemployment is rising at its fastest rate since the 1990s, and the housing market has crashed, pushing the country towards its first recession since 1992. An EU court advisor has backed British rules on allowing employers to dismiss workers once they reach the age of 65. The European Court of Justice is expected to rule later this week or early next year, with the National Council on Ageing arguing that current regulation contravenes a European directive outlawing age discrimination. British workers have the right to work until the age of 65 and cannot be made to retire before then. However, employers can force workers over 65 to retire. The British Department for Business says its aim was to move away from compulsory retirement, but a change in culture is not possible overnight. Under British pension reforms, the state pension age for both men and women is to increase from 65 to 68, phased in gradually between 2024 and 2046. Formula One points leader Lewis Hamilton is already on his way to Singapore following his appearance before the FIA Court of Appeal in Paris. 5 judges are debating whether or not the appeal should be upheld, with Formula One commentators saying the Motorsport Authority regularly wins its cases. Hamilton's McLaren team tried to overturn the 25-second penalty imposed on their driver by the race stewards at the Belgian Grand Prix. The stewards claimed the British driver gained an unfair advantage by cutting a chicane before overtaking his Ferrari rival Kimi Raikkonen. McLaren said the Finn was driving slowly. If the appeal is upheld, Hamilton's lead over Ferrari's Felipe Massa will widen from 1 point to 7 going into this weekend's Singapore Grand Prix. Meanwhile, CVC Capital Partners is very likely to buy the 17% share of Formula One's commercial rights owned by the failed investment bank Lehman Brothers. Private equity firm CVC, as majority owner already controlling 70% of the Formula One group, has first refusal on buying Lehman Brothers' stake from the administrators, proving that the sport is not immune to the current global financial crisis. And finally, some news that glitters. Miners in the southern African kingdom of Lesotho have found one of the world's largest diamonds, a near-flawless white gem weighing nearly 500 carats, mining group Gem Diamonds said on Sunday. The diamond was discovered in the Letseng mine on September the 8th. It's been analysed by experts in Antwerp and found to weigh 478 carats, with very few inclusions and of outstanding colour and clarity. Thank you for watching FinancialMirror.tv.